It's late. You just made some food, opened up a water bottle, and figured, let me just peek at the charts for 5 minutes. This coin has been moving sideways for hours after a nasty sell-off. You zoom in, and suddenly, bang, a fat red candle cuts through the range. Volume spikes. Oh shoot, it's breaking down, you think. You lean forward. One more red candle confirms it. This isn't just noise. It looks clean, controlled, and strong. So you do what most traders would. You wait for that small retest. And when it taps back up and hit that small retest, you short it. But then it holds, and then a green candle, then another, and before you can even react, prices sprint in the other direction. And your short is instantly underwater. You didn't catch the move, you caught the trap. Now pause for a second. Take a look at how price is moving right now. We're not in a strong uptrend anymore. Price isn't impulsing like it was earlier. Instead, you get this choppy sideways movement. This is where most traders start forcing trades. They zoom in, draw a range, and think, okay, breakout coming any second now. But that's not what's happening here. This is distribution. Look at the candles. They're overlapping, full of wicks, and every push-up is getting absorbed. No real follow-through, just indecision. And smart money slowly unloading. And right when retail gets the most confident, boom, one strong bearish candle breaks through the floor. That's your first real signal. Not a guess, not a prediction, that's shift in control. Now this is what gets traders every time. After a choppy range, price finally pushes cleanly upward. And to most traders, it looks like a textbook breakout. You've got bullish momentum, candles closing strong, and barely any pullback. So what happens? People start chasing. Longs pile in late, thinking they're catching a breakout continuation. But what they're actually doing is providing exit liquidity. Watch this. Price taps that prior supply zone. It just pokes above it, just enough to trigger breakout traders. And then, complete reversal. You'll notice the reaction isn't just a casual pullback, it's aggressive. Sharp wicks, strong selling pressure. This is exactly where smart money exits, and late money gets trapped. Here's one of the most common traps retail traders fall for, and how to avoid it like a pro. Price pushes back into a demand zone. You've seen this move before. Suddenly, a big green candle rips through the top of the zone. It looks bullish. It feels bullish. And most traders, they jump in. Right there, convinced it's a clean breakout. But this is where smart money sets the bait. Now watch. That bullish candle gets completely engulfed on the very next move. The breakout buyers are now stuck, and price reverses violently. So what went wrong? Let's break down how not to get trapped. Mistake 1. Enter an on impulse. When price breaks a zone, you don't have to chase. Just wait. A single candle above the zone isn't confirmation. It's often just a liquidity grab. Mistake number 2. Ignoring candle structure. Was the breakout clean? Did it close strong? Or did it wick above and instantly reverse? That wick is the clue. It tells you price moved up, tagged liquidity, and sellers hit it immediately. What to do instead? Wait for a break and retest. Let price break the zone, then see if it holds on the retest. If it fails the retest, it's likely a trap. Number 2, use candle closes, not just wicks. Don't trade the breakout, trade the reaction after the breakout. Strong closes above the zone, that's your signal. Wicks and instant rejections, that's your warning. Don't react emotionally. Let the trap expose itself. The market is designed to test your patience. Remember, price doesn't just move, it manipulates. If you're entering at the breakout, you're likely feeding the trap. So zoom out, slow down, and let the price prove itself before you commit. React with clarity, not emotion. Let's zoom out and recap everything we just went through. We had a textbook rally into supply zone. Price tapped in clean, pushed a little higher, and then boom, instant rejection. A lot of traders tried a long breakouts here, but as we saw, it was nothing but a trap. So the question is, what should you be doing when price behaves like this? First, when a level reacts instantly like that and creates a strong rejection candle, don't chase it. Let it breathe and let the price come back to you. In this case, you wait for a clear lower high and then wait for price to come back into that zone. That's your chance to strike. Not on the fake breakout, but on the retest after the trap has already sprung. And if you ever feel like you're being left behind because the move took off without you, that's your signal to slow down. The best setups give you a second chance. Your job is to be patient enough to take it. Now imagine you had just waited for that retest, marked your zone properly, and didn't force the breakout. You'd be in profit, holding a much safer short and feeling calm, instead of being trapped and confused. So next time you see a clean breakout, ask yourself, is this real or am I just the liquidity? Because the truth is, these setups happen every week, and most traders fall for the same trap every time. But now you know better. You've seen how to spot the trap, how to wait for the retest, and most importantly, how to stay patient. If you want to keep leveling up with strategies like this, breakdowns, replays, and full case studies, hop into the Discord. We break these down live and in real time, so you don't get left behind. Links in the description. Discord.gg/Shadur.